we'll see what we think is going to go on today. There we are. Perfect. All right. YouTube is now telling me that it's ready. Wonderful, wonderful. StreamYard. Good, good. All right. So from the title today, Ethereum's burn rate over 50%. So the rate that we're talking about, if let me zoom in here. So total since EIP 1559 has been released, the London hard fork, you can see that the Ethereum that has been burned is over 27,000. So if we double that, we're up to 54,000, and you can see we haven't hit 54,000 new ETH issued since the London hard fork hit. So the interesting thing is that this was running at about 30% of the new Ethereum issued, and now we're closer to that 50% of the new Ethereum issued, and some of that has to do with the base fee that's being paid, and the base fee going up a little bit in the most recent days. And they also changed the look of this. This was a line graph before, and now they switched to a bar chart instead. So that's something that we want to pay attention to. And we can see the transactions that we've seen recently, and also they have a tracker for the gas used and the gas targets that are out there as well. So I think that it's important to see how this plays out over time with the amount that's burned and the amount that's issued, because one of the big things that will push the price of Ethereum is that sort of diminished inflation rate that we would have, and especially if we push on towards a deflationary asset, as we keep on hearing about. We'll see where this should happen to climb, and as we get more congestion in the Ethereum network, that we would get higher base fees. And so that would be something that if they adjust upward, and as they have recently, that's something that will cause this to burn just a little bit faster, while the amount that are issued, which is about 2 ETH per block, give or take a little bit. Usually it's a little bit over 2 ETH for every block that we have validated. Let me see if it shows here. There we go. So we've got tips. There we go. If you check out the rewards, this isn't quite totally accurate here where it says that the rewards are 2 ETH. It's actually 2 and then a fraction of ETH on top of that for rewards. So that's something that that you want to watch and that you want to check out. Unless let me see. There you go. So if you search Ethereum burn tracker and then you get etherchain.org. There we go. This is just another place that you can go and you can check out that burn rate that we have for the Ether token for EIP 1559. You can see right now the base fee is up at 64 Gwei. And the total burn here that they have is over 27,000. And you can see also another cool thing is that that's almost $90 million worth of ETH in under a week's time that we lose that much of it. And you can also see they give us burn rates, that 3.31 ETH every minute that goes by. So just imagine that's 10 grand, 10 grand a minute just up in smoke. So that's pretty cool to watch that happen. And so they have some other stats here and stuff that you can check out. And I don't want to take up too much of the market open by talking about Ethereum now, but you can see that trend upward that we have recently with those base fees. So that would be a higher usage that we would have on the Ethereum network. And that's why you have those escalating base fees moving right along with it. So trending slightly upward, we'll see, especially now as we push on that 3,200 mark, how much that's going to take us up over time. So speaking of which, being over 3,200, check out the Ethereum's price. Bitcoin, by the way, over 46,000. That's also very noteworthy. So let's go in here. So what I said yesterday during the live stream is that closing up above the 3,200 would be very important as far as having resistance firmly broken at that 3,200 mark. So there's not really a hard and fast number when it comes to support and resistance. Really, want to think about it as an area of support or resistance, and right around. And so when I say 3,200, what I'm talking about is more of a ballpark figure. We do have a round number resist at 3,200, and let me zoom in here. I'll zoom in 2 ways. One, I'll make it bigger on the graph itself, and the other way that I'll do this is that I'll actually zoom in on the web page so you can see a little bit better. There we are. So if we go back to this candle right here from yesterday, the closing price was 31.41. So we closed down below the 3,200. And then on today's candle that we have here, as this is the daily chart, our open was at 31.41, which makes sense because that was a close from the previous one. And then moving on from there, the current closing price, but the day is still going on. So right now we're 32.38. The high was 32.48, but we want today's closing candle to close above 3,200. That would be good for confirming that we're starting to finally break through. So right now we have just a tiny double peak, not quite. It'd be nicer if that was well, not nicer, but it'd be more so if that was the body of the candle that we had right there. So this is one that could easily push on. And if we see it close above that 3,200 mark, then that's better confirmation that that 3,200 resist is firmly broken, rather than just something that we can tend to just peek over for a little bit, that we actually managed to trade above there and close above there. So we want to see that sustained and turn into support rather than resistance. All right. PSEB. Oh, yeah. PaySafe. Yeah, we'll go ahead and check that one out. Let's move over to the stock stuff. We have about 6.5 minutes until the market opens. And hello, Brooke. Brooke is requesting PaySafe. So, I crashed WEBULL. There we go. Open right back up. So some of the crashes and the lag that you see on WEBULL, it's important to point out that when I'm not live streaming, I don't have these same issues with WEBULL. It's my system resources that cause a lot of the issues that we're having that I have. When I'm live streaming, it's a resource hog. It takes up a lot of my system resources, and so a lot of times I end up below where I need to be. So sometimes I get lag, and sometimes I get crashes like you just saw. All right, let's go to PaySafe. There we are. By the way, WEBULL, this is what we're looking at here. I do have a referral link if you want to support the channel, as a way to thank me, and plus also get free stuff for yourself, free shares. There's a referral link for WEBULL. You can click the link, sign up, and deposit. I think it's either $5 or $100. I forget what promotion they're running right now, but that would also get you some free stocks. It gets me some free stocks, so it'd be a win-win, and you're paying yourself, and WEBULL's paying me. So it's at no cost if you want to do that. Moomoo is also down there, which also gives you exposure into foreign markets. Specifically, China would be one of those. Just another way to get free stocks. I think you get one for signing up. I think that you also get one more for depositing $100. And then they have other incentives that are in there as well, and they have other rewards programs. So Moomoo, I'm still learning about it. However, I'll take the free shares in the meantime while I learn about it. If you want to check out those referral links, you can do so. All right, that's enough of those plugs, but those referral links are down in the description. So PaySafe, it looks like we're running down near support on PaySafe. So 960 was the bottom of this thing, and then it looks like high 9s to low 10s is sort of where we bottom out on this. We're near that bottom right now, and we have a pretty solid downward trajectory moving on right now. So fairly bearish look with a lot of the risk coming out, and down about 50% from where it was at, just under $20 per share to where it sits now. We're up about 2% in the pre-market. Analysts on this one, we have a decent amount, about 35-ish% to the low analyst estimate out of these 8 analysts that are on this, and up to 1650. So about a 50% upside to that average analyst estimate for PaySafe. Let me see. Set appointment. I just want to see if we have any specific news anytime recently. It looks like it was mentioned by Kramer. Let's see if he said anything substantial. A lot of times these are so brief, you don't really get anything out of them. Sometimes he might just say, buy it, sell it. He likes PaySafe. Man, I have been, man, have I ever been wrong. I've been pantsed by the stock of PaySafe, and yet I'm still sticking by it because of that customer list. I'm with you. The customer list is too good for both to be wrong. So might be looking into what he's talking about for the customer list. I don't track PaySafe, but I would definitely take a look at that. So it sounds like it went opposite the direction that he thought it would. So finding the reason for the drop in the share price, and finding what it's going to take for it to rebound or see where that staying power is, that could be a good thing. Here, we'll check it out on tip ranks. Moomoo is a Chinese company, Faiz. It's part of Futu Holdings, FUTU, which trades on the New York Stock Exchange. They're the owners, and I believe they're also the producers of the Moomoo exchange. or the Moomoo app for getting the exposure to United States stocks and also Chinese stocks. And I'm still, like I said, I'm still learning about it. I'm still looking into it, but it's a good opportunity to get some free shares out of it. And I believe maybe it's with 3 or 4 invites of your own that it gets you 1 free share of Apple, but that's something that I would have to look further into. So there you go. Bring up PaySafe on tip ranks here. So I mentioned about a 50% upside to the average analyst estimate. On tip ranks here, 53% to that $16 price target, and this is off of 6 buy ratings. And there we go. 3 days ago, RBC Capital said $17. Go ahead and buy it. Cohen and Company said to buy it for 15. That's 2 months ago. 2 months ago, 15. And I don't want to go beyond 3 months ago because we start to get some really old information on that. And I like to stick to the newer stuff, which is working with the more recent, more relevant information. So it looks like $15 to $16. And I don't see anything coming out near this this $19 that we had from Wolf and Compass Point from the 4 and 5 months ago that we have here. So finding out what that next catalyst is, what's that thing that's currently holding that price down to under $11 per share, the mid-10s right now. What exactly is meriting that price action? Why did we get that big sell-off the way that we did? And what is it going to take for it to turn around? Those are some questions to be answered for PaySafe. All right. And hello, Faiz. Does WEBULL work in the UK? Faiz, I know that other people, I know somebody who lives in Greece, and I know Greece is not the UK, but I know that they don't have access to WEBULL in that part of Europe. So the UK, I don't know if Brexit impacted that at all. If that's something that would be accessible. If you do live in the UK, you can just go to WEBULL, start look it up, or use my referral link. Click on it, and you can find out if it's something that you have access to. Let's see. Does WEBULL in the UK? There you go. Let me see. Well, according to this, and this from January 29th, 2021, it says, but has yet to make it to the UK. So it sounds like right now, if you're in the UK, that you don't have access, but that is about a half a year old at this point in time. So that might be something to look into if you're interested in WEBULL. And if you wouldn't mind using the referral link, and should you have access, I'd appreciate it. All right. So back to some of the stock stuff. There we go. So PaySafe has a fair amount of upside potential over the next 12 months. And like I said, finding out what's that customer list that Kramer's talking about, and how does that turn into price action here, and what will it take in order to get to back up to that $15 to $16 range for that 12-month price target. All right, I want to take a look at ChargePoint. There we go. The ChargePoint in the pre-market is trading at about 26.50, just under it. I think at one point I saw it at 26.52. And for ChargePoint, you can see the price action that it had. Oh, hey, the market opened for us. I guess I do talk too long. So with the market open here, I was going to say that we're sitting right at resistance right now in the pre-market, but now that the market open, it looked like we popped up just above resistance, which is a good thing. As a matter of fact, the current where the current price is sitting right at resistance. So if it stays up there, that could turn into support and then move upward, and then we'd have room up to about 27.80, where we see for the 50-day that we have here. It's gone flat. The 200-day is still positive. And we want to keep that price pumping to start curving upward and have that golden cross moment, which is a really bullish signal for us, along with the volume coming along to support it. Furthermore, check out that RSI. Like, we are up at 54 on the RSI, which is back into bullish territory. And starting here at this peak, we lowered just a little bit, but then we started climbing. Our lows are getting lower. So this is a sign that we have some momentum picking up for us. Even though we were still bearish before, now we're into bullish territory. Now we want to see higher highs come in and higher lows, showing stronger momentum coming on and more near-term price action for ChargePoint. Let's go down to the intraday stuff. Hello, Poppy. Great to have you. And good morning, Darren. Thank you very much for verifying that. So it sounds like, and yeah, trading 212. I know I know other people who are over in Europe who use trading 212 because they can't get into WEBULL, so that could be a good alternative. All right. So check out ChargePoint at the moment. In the pre-market, it was trading near resistance, and now it's dropping down through that. Let's actually go down to the minute chart to see if we get a little bit more information. All right, so that's a decent drop. And if you spend too much time on these low time frame charts, especially, it doesn't really make sense if you're a long-term investor, because then you're looking at the fundamentals of the company. This would make sense for more day trade opportunities. But just seeing what the recent price action is, and where exactly it's going to drop, it's so hard to watch that, and you really need to look left to see some of the history to find out where you can find those areas of support and resistance and where it's going to drop. And you can also look into the level 2s to see where you have that sell side pressure over here. We see a lot of that coming in, and we don't have the buy side pressure necessarily coming to match it. We have buy side support right around 25.80. We have sell side pressure. You can actually see some of the orders down here as well, 26.27, 26.41, and we're just going to have that little bit of battle. But it looks like there's not a lot of orders that are existing right in the middle. It looks like we have support of fairways down and resistance of fairways up from there. So this thing could continue to jump around on us in these pre-market hours. Let's look and see on the daily chart. So we'll look more for the recent price action that we have here. So the resistance is right across about the top of where these candles are here. And right now, we're staying near the tops of those. So like I said, if we end up trading above them all day, then we can consider it to be resistance somewhat broken, and then that can start acting as support for us onward up to that 50-day moving average. All right, I want to move on to some of the other ones here. Let me see. Good morning, Bernard. All right, so for a percent change, Polygon up 18%. Awesome. So the ticker here is MATIC, or that's the token name for the Polygon network is MATIC, M-A-T-I-C. And last I looked at this, I think I looked at this yesterday, and it was around, are we on the daily chart? We're on the daily chart, yeah. So I was going to say it was around like $1.14 or $1.17, and that fits in with the highs and lows that we see from that. And today we get a really decent bullish candle, and we might have to look at this on CoinMarketCap to get a better view of the chart. But finally, we get some bullish action coming out of that. And this is my favorite layer 2 solution on the Ethereum network that really helps with that scalability. And one of the reasons why we could see that price action today is because of the elevated gas fees that we get. There's going to be congestion in the Ethereum network, and there's going to be higher gas fees for the transactions on the Ethereum network. Then we're going to see more price action on the layer 2 solutions, where you get that sort of scalability that allows you for like a fraction. I think it might be maybe a tenth or maybe even 100th. I'd have to look and see how much the savings is for the Polygon network that we have. But it's huge. It's very substantial savings. And when we have the sort of spike in the Ethereum gas fees that we saw when we were looking at the Watch the Burn, and also on, what was it called? It is right. There you go, etherchain.org/burn. When we see those gas fees start to elevate like they do, then we start to see more use of the side chains. And so this could be something that could be increasing the popularity for Polygon. And something important, look at all that resistance that they had bumping up like around $1.25, $1.25. They dropped down from that to about $1.17 or so. And then finally, we get a significant spike here. And we're going to have to go to CoinMarketCap so we can see farther left to see if we have any other lines of resistance or where we're going to stop for that. So let me zoom back out here. And we'll type in MATIC to get to the Polygon network. All right. So let me scroll on down. We should be getting that chart sometime soon here. This did pop up, I think, $2.60 at one point, and then another time with a Mark Cuban pump to like $2.20. So we have some significant highs for this. And with Ethereum and Bitcoin making their climb back up, Polygon should also, with Ethereum anyway, should be something that also continues to make that climb, but also indirectly tied to Bitcoin, because Bitcoin being the number one in the crypto space by market cap. All of them should be influenced in one way or another by Bitcoin, even if it's a little bit more on the minimal side. So let me see. right around there. Let me grab another horizontal line. Where we're currently sitting is right there. And then support. There we go. So we could fall back about 12-ish, 13-ish cents back to where these resistance lines were that can be support for us. And we could drop even lower from that. There we go. That would be a decent line of support as well, all the way back down to $1. When I saw this dip down in here, when we sharply went under $1, I bought heavily into Polygon because I knew that that $1 mark would be something that we would quickly return to after we got through some of this this trouble. And you can see some of the volume tapering off, and then as soon as it hit this low, and that we started to get those volume spikes back in, that you started getting increased buying. And now as the Ethereum network starts to gum up a little bit again, as the excitement comes back and there's heavier transacting volumes, we start to get more of a spike here as well. So we'll see if we push onward past that. We have a lot of room from where we are now, maybe stopping somewhere around $1.50 or so, but we have room up to like $1.65. So I think that we're in good shape for Polygon moving forward. Let me see. Okay. Thank you for addressing that, Darren. Poppy says, what are your thoughts on SoFi? Its earnings report was good, and I've personally been looking. Yeah, 16 below 16. I was being very stingy with SoFi with where I loaded up. I wanted it below $15. I was actually able to get some shares of SoFi below that $15 mark, and I think I got a few more, maybe around the low 15s. We finally had some price action that pushed us up above the $16 mark. You can see right now it's sitting at 17, and we have look at the way these candles are shaping up. These very narrow range candles that we have, maybe not quite dojis, almost like spider candles forming up here. And this is a good thing to see as we have that battle play out between the bulls and the bears, deciding on where that next price movement will go for SoFi. We have very strong support coming in. You can see that across all the different selling pressure that we had with SoFi, right at or just below $15 is where we're finding very strong support, which is it's a decent tumble from where we're at now. It'd be over 10%. But I don't know that we would see a sudden 10% drop in SoFi, especially in light of the earnings that they put out there. Their banking charter or their application for the banking charter that we should find out in either, I think it's October or November. We should find out in, I believe it's Q4 of 2021, whether or not they get that banking charter. And if they do, that should be a huge catalyst for them moving forward. So right now, the near-term fate of SoFi is still being decided. And you can see over the past 3 days, including today, that's something that's still being debated for finding out where that price should come in. We have lots of buy-side support coming in. It looks like around really starts to spike up, but we can see it down here too. 1696, 1697, lots of orders. And then also we have more that's even off the screen here at like 1685. We start to hit those walls 1682-ish. And right now we just don't see that same thing from the sell side pressure coming in to match it. 1705, huge amounts of sell orders. Same thing for 1706. All right, so SoFi, I do like SoFi. And right now it is trading relatively cheaply. Only 2 analysts that we have covering this. So more coverage would be absolutely excellent moving along for SoFi. One strong buy, one says to buy it. And so we have like a 30% upside to the low analyst estimate. And what's $13 up? So that would be like 60-ish% upside to that high estimate. So let's go over to tip ranks and see if we can get a little bit more light shed on those analyses. Take a sip of coffee while I wait here because I'm doing a lot of talking. Oh, that's good. It's always good. There we go. All right, so 2650, 55.56% upside. 7 days ago from Oppenheimer, $23. And that's a 4-star analyst that we have, 15.6% return rate and success rate of about 60%, which is pretty good. Then let me see, 63%, 50 out of 79. So fewer ratings. This guy's just under 4 stars and 8.3% average return rating. So that was 2 months ago, 30 very bullish, and then something 7 days ago, so maybe a little bit more time relevance there for 23 coming out of Oppenheimer. All right, so rocking above $17. Like I said, the current price action that we see is very good for SoFi for starting to, let me zoom out, starting to really recover some of this price action that we saw in the most recent rally from the middle of May all the way up through, let's see, the beginning to middle of June, I would say. And then we had a kind of a really big pennant formation forming, and then it just failed to come to fruition. And you can see lots of volume coming through here with that sell. And so now we're coming back up to meet that moving average. And if we cross over it, we're in really good shape as well. And I'd say that we're right now, I mean, there's always the overall market bias. There's always macroeconomics that can come into play. But being a fintech company like they are, being able to push over this resistance that they're finding about 17 and a quarter or so, I think that we could see that sooner than later for SoFi. So that would be something I would definitely keep an eye on. All right, what else you got here? Oh yeah, Bill, thanks for bringing up the CPI. The CPI fell just a little bit short of expectations, which is a good thing. We don't want that consumer price index to keep on pushing higher. So to meet or to beat expectations would be a bad thing for us, especially with the because a lot of us who attend live streams like this one are interested in the growth stocks, the things that are going to grow quickly and make a lot of money for us in a relatively short amount of time. Like 3 to 5 years versus a few decades, for example. So having that low inflation makes it easier for those companies to reach profitability and actually have more substantial profits because there's not as much inflation taking place on those. So taking this as a sign that inflation could start to peak and maybe even start inflecting downwards is a really good thing for us as we move forward with that. So what else we got? We got AR Ron. Hey, doctor. And hello, AR. Thoughts on Joby? Let's get some thoughts on Joby. There we are. Wow, up 7% today. That's interesting. All right. My goodness. So let me zoom out a little bit. I mean, if you want to see a classic case for consolidation, look at this narrow range right in here for the price action. So if I zoom in on just that spot, so if I chop off this stuff to the left where it really spiked up to $17 a share, and I cut off this stuff that's to the right, it'll seem a little bit peakier. But even so, that's still pretty tight. And let's do one other thing. Let's go to the indicators and let's grab our Bollinger Bands. There we go. So I haven't shown the Bollinger Bands in a while. It is something that when you have those big movements, so here we have somewhat narrow relative to what followed these expanding ones. When you have a narrowing of the Bollinger Bands, that can indicate a breakout in either direction, to the upside or to the downside. And then relatively speaking, relative to this big movement that we see, look at how narrow these Bollinger Bands got over time on Joby Aviation. So like I said, when you have a narrowing and these things just got narrower and narrower, so we have a price squeeze between the bulls and the bears. This does not mean that you're going to break consolidation. You typically need a catalyst one way or the other to really push that forward. So this price kind of went dead. It didn't do anything for a long time. And then all of a sudden, we got even more of a squeeze starting at the beginning of July. And then we hit the beginning of August. And then we had the breakout from there. So finally that happened. And I would say that we're going to start seeing that curve over possibly soon. Let me see. All right. I figured that this was a small company or their financials at. All right. We have not much of anything to look at in terms of financials. So probably a decent amount of risk. Cash flow and cash equivalents 1.69 million. Yeah, this could be a tiny one. What are our volumes like on this one? Yeah, we got a couple million on it. So decent amount of excitement. Look at this volume, how much it increased while it was still consolidating. It's almost like somebody knows something, or that somebody found some piece of information, but it didn't quite hit until this is August the 3rd. So August the 4th, we had a sharp drop down in price to 926. And from there, we shot up over 1079. Huh. So almost 20% difference from where that bottom was to where we're currently trading. Joby Aviation announces closing a business combination with Reinvent Technology Partners, become publicly traded company. That was 17 hours ago. All right, so that's probably the news that's showing us that sort of price action we're seeing right now. Usual option activity, August back merger vote. So where we're looking at here. So today is the 11th. Okay. Oh, there's our catalyst for us. The things that was moving along was this business deal that it has going on. It's funny that we had that sharp drop though first, and then we had this huge engulfing candle that surpassed, and it wiped out, erased completely any of that drop that we had, and then another somewhat engulfing candle from that, and then finally trading up above. So I didn't, like I said, we didn't have any analyst estimates on this one. This is one that for me, if I was going to get into it now, it would mean that I saw some fundamental value in the company that merited the price that it currently has at almost $11 per share. Let me see. Let me go back to the financials and liabilities. Yeah. So what I would wonder is what's meriting this market cap that they have, especially if it's a pre-revenue company. So that could be something to look out for. And actually, I was talking about consolidation, but if this was a SPAC merger, then that would tell us why it was $10 per share. So that could also be why it was trading so tightly recently. A lot of hype with the SPACs, and then this is okay. And then given the timing of this in February, it did have a sell-off and a lot of cooling down with the different SPACs. So that would explain the tight consolidation that we see. Okay, and then most recently with the merger. Okay, now I'm starting to piece it together and understand. Okay, flying taxi future, not now. Yeah, I think this is one that I looked at before. The flying taxi thing, I think would be absolutely awesome, especially if it's the next wave in speeding up transportation in a very big way. It's not really something that I've put a lot of time researching about or reading about. It's just something that I've heard about, and the few things that I've read about it out of nerdy interest, they sound pretty cool. But about this, about trading now, after seeing such a big run up here, I would look to try and find some insight on the future value of the company and look at its current valuation. Is it trading rich? Is it trading about right? What peers are in its space? Really try to get some sort of feeling for where that price is and where it should be to find out if it's rich or if it's cheap right now. But being that it's a big jump like this right off the bat, it could be a little bit rich. I would much rather have found it, or if I was in on it, I would much rather snag it during that day when it dropped down to almost $9 per share, bottomed out at $9.26. That's a day when it made that big drop. If it was one that I was already bullish on, that's a day that I would have used to make my entry point, or possibly even on this day right here when it came down off of that big ramp up high. So rather buy on red days than green days. All right. Let me see. All right. Zomedica. So I believe that they were able to launch their commercial product that they had for a non-invasive diagnosis tool. I think it was maybe an ultrasound or something for pets. And so this one was really hyped up. It went almost up to $3 per share. And let me see, back here was when tech and high growth started selling off right in that beginning to middle of February. And then we also had the release of it in March. It had that next big spike there, and then just sort of subsided. So for them and the animal medical treatment, let's get Bollinger Bands off of there. So at least as far as the support levels go right now for Zomedica, it's sitting right now at a pretty good base of support that it started this downward descent that it's been making. It actually started leveling off, and we still have that taper from the sell pressure that we have. However, we're holding that nice base of support. So if you're thinking about buying into it, now would be a much better time than when we saw this volatility back in here and it was jumping all around because we didn't know what was going to happen next. And not to say that we know what's going to happen next year, but we should start being able to see the results that they're making from the sales of their product. So just to see how that's progressing and see how much of the market share. I think it was a $2.4 billion market share that they were trying to capitalize on, and they certainly won't get all of that. But watching their earnings and also looking at what else they're doing besides making that one product, where else are they going with it, and trying to really expand their business. We need to see what's going to move their price next. So for a company like this, most definitely looking at what that next catalyst is, that next thing that's going to propel its price upward. Without any news or without any markers, this is one that could just it could trail off and it could go even lower than this. So it's always going to be risky. They are small, and I don't think they're pre-profit yet. So when are they going to hit profitability? And how's their product doing so far? What innovations are they making? Just a bunch of different questions. And just looking at the level 2 for today, huge price swell coming in at about 60 cents, just under 60 cents. Lots of sell side pressure. We'll see if the bulls are able to come in and keep that price floating up there at around 57 cents or so, 57 and a half, right around in those areas. No problem, AR Ron. All right, so let's take a look at some of the other things that we have moving. Orphazeme back up over 20%. This one has made some big jumps in the past. You can see, I remember doing a live stream when this happened back here. Back on June the 10th, had a little bit of action since then, and then sort of trailed off, and you can see that sort of consolidation that it had, and there must be something else that took place recently, because it was just down at about $4 per share, and now it's up over 50% from then, taking us up over $6 per share. So see if we have any news on it. All right, so options activity, it looks like. And then 5 days ago, new publication date for the interim report in first half of 2021. Or if it's even to cut 2/3 workforce under restructuring. So if they're cutting their workforce under this restructuring, if that's something that cuts down on their cash burn, that would make them survivable for longer. I don't know if they're profitable because I don't track them, but just something to think about there. And they are coming up and touching resistance up here, almost at $6.76. So jumping in now, especially on a day when it's 20% up. If you were in it before, good. And if it were me and I was doing it as a swing trade, I would most definitely use today to take that profit. And nothing that I say is financial advice, because it can't be a financial advice. I can talk about what I would do for myself, but I can't talk about what you should do for you. So this is entertainment. Take from it what you will. And hopefully I say something that helps you out in the meantime. You're welcome, Bernard. All right. So let me look at some of the other ones. Cardano, I should actually also mention, and we'll go to CoinMarketCap for that one. So Cardano's token is ADA. Their smart contracts are coming up in the relatively near future, and so not only is it moving up with the rest of the crypto market, but it also is moving on its own merit as well. So this is somebody who used to work with Vitalik Buterin on the Ethereum network, and then they had philosophical difference over the future of where cryptocurrency should go. I believe Vitalik wanted it nonprofit, and I believe that Charles Hoskinson wanted it to be for profit. And I'm not totally certain on that part of the history, but I know that they separated for philosophical differences. So rather than or I should say, not rather, I should just come right out and say that using the IOHK as the, I believe that's the research arm that they use to do research-backed decisions for the crypto space and the future of Cardano. It's going to be one of those slower rollout cryptocurrencies that we have, but it's also something that's been researched and worked on and something that's been discussed in depth. So any change that you see coming up is something that's been studied very well prior to any sort of implementation. It's also, so it gets researched, it gets tested, and it shouldn't make it past those two things, then it can move on to implementation. And you can see they're actually sitting right up at resistance right now at about $1.85. So if they make it over this this most recent run up that it has, then we have a lot of room up over into the $2 range. So woo, my apologies. Let me zoom in this way more. Actually, I wanted to zoom out there so we can see more of the price action. There we go, and zoom in this way. There we are. So if we take a look at the history that we have for Cardano, we're almost to this peak that we had before over here, and after that, it's uncharted territory all the way up to the where was that peak at? The high price that we have here, $2.47. So that is a lot of room to run off of this high candle that we have here at $1.89. That's just an incredible climb. So after we pass that point, there's nothing stopping us resistance-wise to make that run up to that point. So this is something I would definitely keep an eye on. And I bought some Cardano down near $1, and I think I bought some more at around $1.25 throughout these different dips and this different sell-off that we had. And I don't think that it's an Ethereum killer, but I do think that it's an Ethereum alternative and an Ethereum competitor. So Ethereum is still my number one, but I believe that there's plenty of room in the crypto market for Cardano to also survive. If we look at let's go back to where we can see the market caps. So Ethereum right now rocking almost, it's just about 20 billion shy of hitting 400 billion. And Cardano's here at about 59 billion. And so this one, I believe we'll see it moving up over time to take up more of the market cap. That will move it up the rankings to be more among the top with Bitcoin and Ethereum as we move forward. Dogecoin up 36%, 27 cents. That's incredible for the people who have been investors or even traders in Dogecoin for a long time. I have thousands somewhere, and I've mentioned that before. And should I ever find them, I'll see how much I have. I think it's only around like 20,000 or so, but even so, what's that? About $5,000, and I would definitely take that at this price. But even if I did find the drive that it's on, then it's a matter of it's on a little flash drive. I don't have the key to get into it, so a little bit of a problem. But it's around somewhere. Maybe I'll find it, and maybe also I didn't throw out that tablet that had my information on it for accessing my Doge. All right. What else we got moving here? Polkadot up almost 5%. ETH, Riot, Coda, Chewy. Let's stop by ALPP. This is one of those smaller, high-risk plays that we have. They've been growing, and it's slow, steady growth at first, but I think they'll grow over time. They're establishing a nice base of support right around that 250 to 260 mark. So we see that taking place. And for a stock that has moved the way that this one has, it's good to see that sort of support come in, that it starts to become really strong support. The 200-day still positive slope, the 50-day negatively sloped, and we just had little tiny death cross come in there, which is typically a bearish signal for us. And we could, and it is a lagging indicator. So we may have already seen the drop by the time that forms up. However, we haven't seen that drop yet. Also, there's no real excitement. This is one that's going to move on momentum. Momentum has taken it up over $9 per share. And the thing that's being waited on for ALPP is that NASDAQ uplisting. Right now, I believe it's still in the OTC markets. If it makes it onto the NASDAQ, then there will be a lot of buying pressure that we have, because it will have to be included in like ETFs and stuff that would track the NASDAQ, that there would be some sort of small positions that would also be put in there as well. And also there are some people who don't trade on the OTC markets. So moving into the NASDAQ would also enable them to purchase that. I think on TD Ameritrade, it's something like $5 or $6 for every trade that you make. I'd have to look at that if it's from the pink sheets or from the OTC markets. So and that kind of stuff, those fees that you pay or taxes that you pay, that stuff adds up over time, and it also diminishes your returns. So those are things that as investors we try to avoid. So watching for that NASDAQ uplisting, it is way overdue. And I know that there was a backup for some of the applications and processing. So hopefully it's something that we hear about sometime soon. All right. Bernard asked about Zoom. Absolutely. Ooh. I just want to take a quick peek at this. So Digital Turbine just reported their earnings, really good earnings coming out of Digital Turbine. I believe that they beat expectations, and yet we have a bit of a sell-off anyway. And TikTok, I believe, well, I know that they have a partnership with TikTok, and that's a good thing. TikTok, very fastly growing. I believe that they're going public on the Chinese exchanges in the near future. I have to look up for when that date is, but that could be a catalyst for the prices that we have for Digital Turbine moving forward, depending on the details of that partnership that they have. And so with Digital Turbine, something that I say is loading up under $60 per share is something that I like to do. And we are so darn close to being under $60 per share. I'm gonna have to consider taking more of a position on that one. All right, Zoom. There we are. Let's zoom way out on Zoom. Excellent. So all the way back here. So this is October 19th of 2020. They peaked at almost $600 per share. And since that time have come down to below $400 per share. And looking at what we have, the 200-day is now negatively sloped. So that's a bear sign for us. The 50-day is a faster moving average. And so that's positively sloped and they're starting to cross each other, which could be a very good sign for a turnaround. Looking at the RSI, we're in bearish territory, but it's not the same low that we had before. So if this turns around for us, and it could, if we look at what we have for the price action right now, it is sitting right on the moving averages at support as of today. It's sitting on the 200-day, and you can see even before that, all the way back to July 29th, it was using the 200-day as support, and it's still riding that 200-day as support. That cross could be something that would give us a near-term price action movement, depending on the news for the company and the progress of the company. But you do have to also look at the wider trend and see that across these tops, we have almost a linear descent across the tops, linear across the bottoms. However, recently, the lows started getting higher, and we haven't seen that same sort of moving for the highs, that we went slightly lower, but they're almost even across the tops. There we go. So if this turns around and forms a new higher low, that could be a good thing. But then we also want to see it push off and break resistance well over the $400 mark. That would push us back up over these prices. So Zoom Video Communications, there you go. So underperforming the market, okay. So for Zoom, it's something that, you know, rotating out of the pandemic, is it still as relevant as it was, or can we attribute all of the success it had to that time during the pandemic? Do we have a paradigm shift over to companies that would use Zoom technologies, and how does their competition? I know Microsoft with Microsoft Teams is something that that my employer used, and I believe actually ARK Invest, I believe, used it, because I sometimes when Kathy Wood did some of her presentations, I would hear the noises from Teams, the notification sounds play. I'm like, hey, I know what they're using. So I don't know if they use Zoom or not for their video communications, but they definitely use Teams, which has video communications in it. So some of that competition could be a headwind for it. Looking at analyst estimates, it's running about where it should be for 12 months from now. So some of that could already be priced in. High analyst estimate on this one is $525 based on 29 analysts. Let's see where TipRanks puts us. There you go. All right. So 421, a 13% upside for a larger company to move 13% like that, you know, is really good. It's different than a company that we're looking at that would be much smaller. So to have that upside is a good thing. 14 days ago, price target of 428. 17 days ago, Bank of America says 480, and those are both from 5-star analysts that we have. Let me see. Just a buy rating from a 2-star analyst. There's 360 from a 4-star analyst 24 days ago. So I think you're going to have that debate for it, and really looking to see how they're progressing, how they're innovating, and how they're faring against their competition are going to tell us a lot about how Zoom's going to perform leading into the future. Let's see. Financials quarterly. All right. Let's go to Seeking Alpha and see if we have an earnings date. There we go. Yeah, Zoom, I think, is a great company, and they have a lot of things going for them. As far as the future of the price action that we have, that's the part that would be more of the question mark. There we go. So if we go to earnings here, we should see that earnings date pop up. I like Seeking Alpha because we get news, and also if the earnings are very close by, then we can also get an earnings preview out of that. There we go. All right, so you can see here their announced date 8:30 during the post market, and then we also have some estimates. So pushing that $1 billion mark for revenue, $1.16 for EPS. All right, this is also important. So check it out. The upward revisions in the last 90 days, 18 upward revisions, only 2 downward revisions. This is actually a very bullish signal for us to get so many upward revisions based on those expectations. So it doesn't mean that it's going to go up from where it's at, but we could certainly, from the price that it's at, the fact that it is sitting on support right now, and we could see that switch it if we keep getting those higher lows. We could see that price climb, especially if we start squeezing up on that 400. This could be the start of a bullish wedge pattern that just hasn't quite filled out yet over time. So I would not be surprised to see this start gaining back towards that $400 mark as we start nearing those earnings, especially with those heavy upward revisions that we have for their earnings. All right, SPCE. There we go. So just real quick, I want to give you guys the 5-minute warning. I got to cut things off by 10:15 today. I have a few things to take care of. I always aim to end at 10 o'clock. So, and then I always end up going over. So just to make sure that I get my time in with you guys, just wanted to put that out there. But I do have to stop at 10:15 because, like I said, I have a few things to take care of after the live stream today. So we were actually rocking along support pretty well in the 200-day. Back when this went up over $50 per share. I don't know how many swing traders were in that prior to that point in time, but when I saw it go, when I saw this happen on that day, that is certainly where that peak hype and momentum starts coming in. And I think I was live streaming. If it wasn't that day, it was within these range of days that I was live streaming. And 625. So let me see. That may have been actually the last day of the live stream prior to my honeymoon. So I said, this momentum, it's not going to stay up there. It's going to come back down. So hopefully if people were in those positions that they were able to take some profits and that they weren't left bag holding by the time that it came back down here. And you can see the excitement after that rocket launch, taking Richard Branson up into low orbit space, really trailing off. And then today that gap down, really answering the question of what is a good price for SPCE is something that would definitely be a good one to answer. We have 11 analysts covering this, and we're running a little rich compared to the low analyst estimate. For me, if I'm looking out 12 months' time, I'd like to be below the low if I'm going to initiate a position. I don't have a position in Virgin Galactic. So for me, today wouldn't be the day that I would start. However, it's a day that I would at least think about starting if it was a company that I was bullish on, seeing that sort of gap down and determining whether or not I thought it was going to bounce back up from there. I believe they just recently had, let me see, space tourism valuation is out of this world. I have to read about that. The space tourism thing is going to be for the ultra rich for probably a while before it would make it down to the everyday consumer, if it would ever make it down to the everyday consumer. I like heights. I like space. You know, I would totally go for it. Should I ever find myself in that position within my lifetime in order to take advantage of that. So definitely that could be a market for it. Let me see. Why did Virgin Galactic analysts turn bearish on the stock? Let's see his analysts. All right, let's go to tip ranks and see how recent. There we go. All right, so tip ranks 37.11, and that's about a 33% upside from where it's at right now. And yesterday we got a hold. Morgan Stanley put out a sell from a 1-star analyst, 4-star analyst 25 says hold it. A sell from Bank of America with a price target of 41. So perhaps that could have been given that price action, sell it off, and they think it'll be worth $41 in a year's time. So right now, from being almost a 50% upside, would they change their minds about that? Is it a much better price now? That could certainly change the tune of how that's spoken about. Let me see. And then Cohen 51, Canaccord 48. So according to the analyst estimates, this price that it's seeing right now is something that could be relatively cheap and much less risk than what you would have definitely when it was up there at those prices, but nothing like the value that would be in the stock back when it was about $15 per share. So back here would have been that great time for entry, but of course that also assumes market timing. Running below support like we are, I mean, and especially with a gap down today, if you believe that long term this is going to get near those price targets, then today would be a great day for Virgin Galactic. All right, let's see where our cruise lines are at. NCLH coming right back. You can see how it rode along resistance, and it's getting close to that resistance again. We want to keep our eyes on this because it looks like today we could come up and tag that resistance. We're really close to it now. Looks like 26.51 maybe is where that price is being found. That looks very close. So just pandemic news and, how soon is sailing going to happen, and how quickly do they expect to rotate out of the debt that they find themselves in, really turning around that cash burn rate that they have. And they've really done well mitigating that cash burn rate, but they still took on a lot of debt in order to survive as a company in the meantime. So they're not going to have that same strength that we saw. I'll go back to the weekly chart. They're not going to have the same strength when they were up almost $60 per share. So it will take them somewhere in between. Should they get full resume to sailing, and should they get customers back out on those ships? So I think the cruise line industry still has a lot of potential to it. And right now, you can see taking that sort of drop that it has on the weekly chart, we're finding support and resistance. Well, it looks like resistance could start turning into support on that weekly chart, right around $25-ish per share. All right. Good morning, John. All right. So I want to do just a moment. Orphazine, by the way, jumped up over 30%. So Virgin Galactic, what else do we got? ANVS, Eton. BNGO's under $6 per share. This one, again, smaller company, high risk, but they are putting out continuous growth numbers. They're still trading above the 50-day, and after that that big sell-off that it had, I'm on the weekly chart. Let me go to the daily chart. Get a little bit of a different story here. There we go. So there you can see a little bit more of the ride that it had from $15.69 was the high point, and now it's down under $6 per share. I know that there's going to be a decent amount of hurt feelings over this. This is one that when I started my YouTube channel that I was covering, and I remember talking about the momentum of it and saying when it was like $2 to $3, I got heckled and laughed at in the comments for saying that I could see this go for $6 to $8 sometime soon. In the next couple of days, it did, and I didn't think that those prices were sustainable at the time back in January. But then it happened, and then we ended up taking on that momentum, and we had a very big push up to that middle of February, and then the same tumble that we saw a lot of the tech and the high growth. But even going back as far as May 13th up through now, look at the 200-day and how well it's acting as support. We have dipped below it a couple of times. Today we're a little bit below it. If we close near or above it, then it's still acting as support for us. But we are finding really good support for this, and we needed this to calm down and give us a base of support, and finally it is. If this should this break down to $5 or below $5 per share, I would consider increasing my position. I did make my money on this, and then I did reinvest some of it to hold on to as a long-term position, something that I'm not selling and something I think that they'll fill out over time. It is high risk. It's possible that that there's enough competition that it ends up becoming obsolete. That can always happen because of innovation. But they're sort of leaders in their own little space with the optical genome mapping and getting to that single nucleotide variation. If they're able to start identifying at the single nucleotide level, then we have a really revolutionary platform on our hands and a revolutionary technology. But those are a lot of ifs, and they're one that they're not profitable yet. So this would be one that still has a lot of risk to it. So going for high risk, high reward. At least we're getting a base of support here to kind of take out some of the risk that we find ourselves at right now. Like I said, I would like to see it. I'd like to see it hit 5 before I started taking off a bigger chunk of this, and that would bring down some of my cost basis that I have. But everything that I'm holding on to right now is profit because of the earlier run-ups that we had, and me capitalizing when it went 2x and 3x and then 4x. I think I sold the rest of my position and then ended up buying back in at some of these higher levels when I thought that it dropped off a little bit, and then it dropped off a lot more. All right. NNDM talking about a lot of risk coming out. And it's 1018. Always talking too much. We could see things. We want to see things start turning. I should talk about their position. We want to see those revenues starting to come in. We want to hear about more sales. We want to hear that the Dragonfly software is actually, or hardware, that their platform is actually making out, that companies are buying these 3D printers for their prototyping, and that they're making sales on the different inks, the reagents that they use in order to keep them running, and also servicing those machines as well. We just need to start hearing about that, and that's the kind of stuff that's really going to be the next big catalyst that we have for NNDM moving forward. So those are things that we should watch out for. All right, so Taco, for you, we'll stop back at Joby just for a moment. Like I said, this isn't one that I follow, but now we're up to 16% up. So rocking above mid 11s here, and we're hitting a decent price wall intraday right around that $12 mark. So I would most definitely for this one, I would stay away from buying it now because a lot of the price action may have already happened. So unless you know more about its fundamental value, where it actually can go up from here, buying on these big days can be very troublesome. And the FOMO is usually just that. And so go ahead and just be like, now wouldn't be that good time. Instead, you want to look for those times. If you do read up about it, learn more about it, and then decide to jump on it, that could be much better. And it'll work out and take out a lot of the risk in the purchase in the meantime. All right. No problem, Sean. Thank you, everybody, for stopping by. I really appreciate it. It's always good to be here. I'll be back again tomorrow at 9:15. Tell your friends, hit the like button to get these things up ranked and get it out to more people. Check out those referral links. It's a nice way that you can help yourself out and help me out. It wouldn't cost you anything. If you want to be a further support, you can check out my Patreon. That link is also down there. I'm in my Discord for at least a little bit every day. I also put out a weekly newsletter and watch list of stocks that goes along with it. You can see the stocks that I'm watching for the week. You can also see my portfolios that I have over there as well. I'll leave you guys go for now. Have a great day.